Unilever, that's sort of 10% of the portfolio. And I know you touched on it a couple of times about the fund being concentrated. There's sort of about 20 holdings, top 10 make up about 85%. What do you think of that? I've seen that being touted as sort of a benefit in the past, but has that been a bit of a hindrance in more recent years being so concentrated?
Definitely. Portfolio concentration, it is a two-edged sword. There's no denying it. Listen, we've always been, we continue to be hugely influenced by Warren Buffett and Charlie Munger, and a lot of the success of Berkshire Hathaway over 50 or 60 years was based on running a highly concentrated portfolio of outstanding businesses and being very, very patient, even through periods of share price underperformance, even through periods of business underperformance, but hanging on to exceptional assets in a concentrated way. And listen, Tom, all I know is that for the first 20 years, that was why Finsbury did well. We had concentrated portfolio in exceptional businesses. Now, we can debate whether the businesses we have today are truly exceptional. I think they are. But I think it would be a massive disservice to Finsbury shareholders to change that investment approach. I mean, at the very, very least, it's very, very different. There really aren't, I really don't think there are any strategies doing or attempting to do what we're doing here. And, there's this Buffett idea of Diworse-ification, holding too many positions in low conviction investments. It's just a route to mediocrity. It's just a route to index plus or minus a bit. Listen, I'm fully cognizant of what's happened over the last 5 years, but the approach and the portfolio structure offers the potential for really differentiated performance. And if we're anything like right about the prospects for a Relex, even for a Diageo from here, then performance can be radically different from the benchmark and, let's hope, radically better.
Yeah. How concentrated will you go? You're still sort of a bit off from the 30% cap. If Schroders exits the portfolio, will you maybe be looking to sort of recycle some of that money?
For sure. There are a couple of more recent holdings which we've initiated where we'd like to find an opportunity to add to those. It's possible that the Schroders capital gives us that opportunity. And we are always looking for new ideas. And again, I think what sort of new ideas? We are fascinated by, and we do find London-listed companies with world-class business positions and franchises that, in addition, have a data asset attached to that market-leading position, where the data asset can, we think, help accelerate growth rates in the future as they deploy AI on those data assets. I do imagine that there will be a number of new holdings for Finsbury over the next 12 months. Yeah.
And obviously, when you buy companies, you ideally want to hold them forever. That's part of your strategy. But what's it take for you to sell a position? How do you approach your sort of sell discipline?
Selling is difficult. Everybody agrees that knowing when to sell is difficult. I want to repeat something said by one of the Baillie Gifford managers I remember reading maybe 10 years ago now. Okay, selling is difficult, but sometimes holding is difficult as well. When things aren't working, when other things are working, the pressure to sell is very, very strong. And sometimes it's right to sell, of course. But so many investors, both professional and private investors, have a propensity to sell at the bottom. It's just human nature. It's so easy to get bounced out of stuff. So I just, I shiver slightly when you say, oh, you want to hold things forever, because I know how trite, how simplistic it sounds. And I just wanted to make a defense of kind of the proposition of don't sell too eagerly, and definitely don't sell out of things that haven't done very well recently too eagerly, because that is the royal path to poor investment returns.
You've got a very loyal sort of shareholder base who've, backed you at the continuation vote on the 100-year anniversary. When you speak to shareholders, what do they say they like most about the trust, and what's sort of a worry that they often bring up that you reassure them on?
It does focus around the portfolio concentration. It is wonderful on the upside. It's painful on the downside. Can it be justified? I think myself, in a world of ETFs and index products and index huggers, it is necessary to offer investors a strategy that is radically differentiated. And I think in the final analysis, those shareholders who've stayed with us or added to their holdings have done so because they want us to stick with this investment approach.